Kathryn Rooney Vera is a chief market strategist at StoneX, joining us with her take on the market. Kathryn, what do you make of, great to see you firstly, evening your side. What do you make of this story? How are you seeing things shape up here?
Well, this is just the shock therapy that Argentina needs. I welcome it, as does the market. We see the benchmark 2035 bond at 2-year highs, and the market is excited about this new president. Out of the gates, his cabinet nominees were market-friendly Wall Street veterans. He's distanced himself from the more aggressive campaign rhetoric, which was shuttering the central bank and dollarizing the economy. And now what we're talking about is having the ministries and the government slashing spending to get to a primary fiscal balance next year, which is fantastic in a country that, as the new economy minister, Luis Caputo, calls it, a country that's really addicted to fiscal deficits. The deficit was at 5.5%, and inflation is at 160%. So things couldn't get much worse for Argentina. It was time to make a change.
Right, and so from that standpoint, do you think the market is looking increasingly investable?
Yes, Argentinian assets are already responding very strongly. They have. The question is sustainability thereof. But I'll tell you what, I think that this shock therapy is just what Argentina needs. It will avoid or the attempt is to avoid hyperinflation, which would do even more serious damage to an already impoverished percentage of the population. It'll help stabilize an economy that's experienced immense foreign exchange rate volatility and lead for more sustainable private sector growth. And that's what Argentina desperately needs. So I think it's going to be positive. The people seem ready and willing to accept short-term pain, and there will be. There are subsidies that are going to be eliminated. So that means oil prices, energy prices, bus prices, everything's going to go up in the short term. But in the long term, this is definitely a good thing for the sustainability of economic growth in this country.
What about how he's managing the currency?
Yeah, well, that's a pretty severe devaluation. I think I was just looking at it's 54%. That devaluation was absolutely inevitable. Everyone was expecting it. So we didn't realize the magnitude of the devaluation, but now the peso's at 800 pesos per dollar, and the monthly devaluation, the crawling devaluation is going to be 2% per month. I think it's the right thing to do. As I say, it was completely inevitable. And I think that I think it's going to incite more inflation in the near term. Even the government is expecting prices generally to increase 20 to 40% over the course of the next coming months. But again, these are short-term pain for measures that will structurally improve an economy that really has been having a tough time in recent years.
Yeah, the anti-China rhetoric, how does that set into things? Because, you know, Argentina, from a resources standpoint, has had a very strong relationship with China, from a trading standpoint as well.
Yeah, well, Milei is definitely closer, I would say, to the United States. So I think while China does have a strong foothold in Latin America, and it has been definitely growing, Argentina still remains an important export powerhouse for China and other commodity consumers worldwide. So I don't think that's going to go anywhere. And really, we have to remember that Argentina's powerhouse is in export, principally of soy and wheat. So I don't think that's going to change anything. I think what you might be referring to is the temporary shutting of the export. But that was meant to kind of indicate that there was going to be a devaluation. So I'm not too concerned about it. I think that this is actually a net positive for Argentina and its relation with commodity importers such as China.
Got it. Let's broaden out the discussion, Kathryn, because you're chief market strategist. The Fed's decision and the market's response and what that means for the future. Give us your sense.
Well, certainly it was, as a friend of mine, Emily Rowland from John Hancock put it, she said, it's a pivot party and everyone's invited. And I just thought that was spectacular, because the truth is that after Jay Powell sounded so incredibly dovish and basically kind of ran a victory lap, everything rallied. All risk assets rallied, fixed income, equity, emerging markets, the dollar weakened. I think this is probably the market getting a bit over its skis, quite honestly. I do think inflation is moving lower, and the soft landing has already occurred. But I would be wary of pricing in what I consider the perfect landing, not even just a soft landing, and assuming that nothing can go wrong, when in fact, there very much could go wrong. So what I'm advising our investors is to maintain a diversified portfolio and protect those risky assets with put options, with cash equivalents, with gold, with options, and CDS protection.
Lovely to have you on the show, Kathryn, and hope to see you soon in person in this part of the world. Happy holidays, have a great holiday season, and see you in the new year.
Thank you. And to you.